$9.86 per share, and buyers are not taking it, or investors are not taking it. So you must have heard that Take-Two Media is bidding to acquire Zynga for $12 billion or $12.7 billion per year, or something like that. That is which translates to $9.86 per share. Currently, now in this session, we have that Zynga is not even close to. Yes, in the pre-market session, it was at $9 or thereabout, but right now is at $8.47. I know there is a clause in that whole situation. There is a shop around period up to sometime in February. So is that what they are looking at? Is that what Is that what market participants are looking at right now? Well, who knows? Who knows? So, well, I mean, you would expect that if you get involved, that you would. You would expect that market participants should have already taken the price up all the way up to $9.86, but it hasn't happened yet. But all in all, it's up about 41% already. Is there any chance that Zynga is going to get a better offer? It's possibly. Maybe that's why they haven't. Market participants have not pushed it up all the way to $9.869. Yeah, could that be the reason why? Okay. You can see there is a go shop around period of 45 days. Okay, so not even 45 days. So I got that one initially. What I said. Well, 45 days. Yes, up till February 24th. Okay, so there's a go shop around period of 45 days on the deal, meaning Zynga can negotiate with other buyers for a better offer until February 24th. Zynga shed more than a third of its value last year, the biggest drop among major game publishers, as it reeled from falling engagement levels and Apple's move to iPhone users to opt out of being tracked by advertisers. It's a big price tag for a company that has not consistently produced profits or new blockbusters. Okay, according to this professor at Ross School of Business, University of Michigan. But with the mobile gaming market likely to reach a size of $116.4 billion in 2024, according to data from Newzoo, some analysts said more deals were expected in the sector. Okay, so yes, that's what's going on with Zynga, up 41.08%. Market participants are probably expecting, based on the fact that they have not taken up that deal, they have not taken the price up all the way to 9.86. Probably they expect that something's going to come off within this shop around period, which is as things stand right now. Yes, about 45 days. So yes, it's a long time, pretty much. Pretty much a long time. Yes, you can see. So so far the stock has been moving sideways, even though it's just also slightly retracing. So it's a stalemate now. It's run up the gain and just moving sideways. Who knows what's going to happen in the subsequent sessions? So I think as it is now, it's giving the stock a boost. At the same time, it could also be a bargaining chip for Zynga. Maybe from this current sort of price, they may now begin to negotiate another 64% gain from here on, from 8.46. So what would that be? 64% will be let's say 64% gain from here. It's 8.46 times 64. Okay, so it will give us 5.41 plus 8.45. $13.86. Well, that would not be bad. That wouldn't be bad at all. And could it be what? Yeah, I mean, they can always do that. They can always negotiate from this current price. Zynga can go on to negotiate higher prices as the stock has gotten a boost. Yeah, so it's why not? Why not make use of the 45-day period and shop around and see whether you can, you know, get a deal from current prices, hoping also that the price does not retrace and fall further. That would make a lot of sense. So let us speculate. We're speculating now. Maybe Zynga is going to negotiate for something close to $10, at least up to $13.86. Yes, who knows? It's possible. Why not? It's why not? If you don't like it, you leave it. But at the same time, maybe I don't know exactly what the clause will be if Zynga doesn't get the deal done. Maybe Take Two probably eventually swallow them up. But who's willing to pay 13.86 per share for Zynga? So let's get the value, the shares outstanding we are talking about here. Let's get the shares outstanding and see the sort of market cap will be, or the sort of acquisition figure, 1.12 billion. Okay, so that will be, okay, 13.86. So that, I think we can just simply find 64% of that $6.7 billion, and we will easily give us what we're talking about. So, or we can just go ahead and multiply by okay, that will give us 13.86 billion. Okay, so and 13.86 billion, and we have what we have here is that they are saying it is okay, 12.7 billion. Okay, so still it can always happen. It can always happen. They can still go ahead and negotiate further for 13.86 billion, which is about 1 billion and some fraction more than what it is. So buy and give and take, maybe with there are a few errors, a few what is it, not errors, if we probably don't have the exact figures as it concerns shares outstanding, all that stuff. So by and large, why not? They can always go ahead and negotiate further for that. They can always go ahead and negotiate further to see if they can get it at 13.86 billion, yeah, or 13 point, okay, roughly 14 billion, yes, it's possible for the 5 days period. Let's see the sort of players in that industry. EA Electronics, I think that's another player there, and I think that's amongst other things why Take Two is going for that, to begin to compete with EA Sports. Yeah, so a lot of opportunities are there. A lot of opportunities are there. It could also come from Microsoft. Okay, they've just acquired a different company altogether. But yeah, there's why not? So right now, as things stand, the stock has still maintaining its gain of around $2.5, or which translates about 41.67%. Momentum is currently very, very strong right now. RSI is equally strong. So let's look at this volume so far for this session. It has to be easily the biggest gainer in this session, 233.76 million. Yes, but the underlying trend is a bearish one. but the stock has now risen above, I believe, all of its, I believe above its 50-day moving average. Is that the event? Do we have any event like that? Yes, it rose above its 50 and 200-day moving average, but as things stand right now, it is below its 200-day moving average right now. The underlying trend is a bearish one, yes. So let's see what the readout is saying here about Zynga. It says it appears to be consolidating within the longer term downtrend. The average directional index is below 20, indicating that the shares have traded sideways recently. However, the 200-day moving average is still sloping bearishly lower. Okay, it's lagging the S&P 500. Momentum is strongly bullish, with 14-period slow stochastic escalators rising as investors pay high prices for ZNGA stock. Today's volume is on track to be heavier than usual, with over 200 million shares having traded so far. The unbalanced volume indicator shows that longer-term selling pressures giving way to new accumulation by traders. So, yes, market participants, they probably know what they're doing. They probably believe that there is a better opportunity for the stock. Maybe they have seen this 45-day shop around period, and they are probably looking at it and saying, yeah, it's possible to get them to at least get another buyer to chip in or tender at least up to 14 billion or more. I mean, that's our figure, So see what you make of Zynga stock, ZNGA stock, and we'll continue to update you. Thank you very much for watching this video.